Information there, Ekta. Thank you very much for that. Very important. The stock is down 6.5%. But let's get a corporate conversation going now. Easy Trip Planners is on our radar. The company reported the numbers a couple of days back. And a quick recap, the gross booking revenues have gone up 75% in Q3 on a year-on-year basis. They've come in at 2,200 crore rupees. Margins, on the other hand, came under pressure. They declined to 42%, which compares with 61% a year ago. But the management in the conference call did indicate that margins will improve going ahead. Prashant Pitti, co-founder of Easy Trip Planners, is now with us on the show to take some questions. Prashant, Q3 has been good. Gross volumes, bookings very strong. Could you give us an indication of how January and the first half of February have been? What are the numbers looking like?
Hi, thank you for having me on the show. I may not be able to give you the numbers which are going on for the current quarter. However, I could give you an indication that the overall travel theme is going very, very strong for the entire industry. And so is the case with the EaseMyTrip. As you have rightly mentioned, the gross booking revenues increased dramatically in the last year. The margin shrunk, but primarily the reason was a year before was a pandemic year where we were getting much, much better commissions from the airlines and the hotels. But for this particular year, it has been consistent. The EBITDA margin has been anywhere between 40 to 45% throughout. So we have been displaying consistency for the last 3-4 quarters in terms of margins, while the gross booking revenue, which is the total business, has been increasing dramatically.
Hi Prashant, thanks for joining us. This is Pavitra. So like you said, for the past few quarters, you have seen around 41-42% margins, and you're expecting that, 60 was perhaps unrealistic because it was in the COVID period. But in your conference call, you also did say that you expect EBITDA margins to go higher. So what is that higher level that you're targeting for now?
See, we are an internet company and the entire bookings happen online, right? So as the business continues to grow, our expenses need not grow as much. In fact, one of the bigger reasons why we are expecting EBITDA margins to go up is basically the adoption of UPI. As more and more people are paying via UPI, we have to spend less amount of money and expenditure on credit card payment gateway charges. So this is one reason. Then as the booking continues to go up, our employee expenses, our marketing expenditures, our discount need not go up in the same proportion as the total bookings, which is why for an internet company, if things are done right, usually the gross margins continues to improve over the period of time.
So Prashant, on that note, just help us understand, take your point that commissions have now cooled off, we're no longer in the COVID era. So what would be the expected regular rate of margins? You did about 42%, just a little over 42% in the third quarter. Is it going to hover around this zone, or do you have the levers to improve from this 43%?
See, overall, we are one of the only, internet companies which is listed, which is profitable. And we have maintained our profitability streak for the last 14 years, since we have been profitable ever since. Overall, in terms of margins, I believe that the percentage is only going to go up. In the next couple of years, you should see the margins to go back up about around 50%.
What will drive that? What gives you that visibility on margins?
Well, of course, the growth which company is seeing, as you have already mentioned, the revenues, overall revenues have jumped up by 75% compared to the last year. And we are continuing to see the growth in volumes. And as the volume continues to increase, the expenses need not. Hence, the EBITDA margins will continue to get better.
Prashant, can you tell us and take us through a bit about commissions and how they operate? Now, for 1 rupee of bookings that a customer has done, how much do you pay to an airline company or to a hotel? What was that number earlier? What does it currently stand at? And if the demand is so strong, is there a risk that commissions come down even further? Or, well, you get hurt on the commissions front.
The gross take rate for our organization is around 8.5 to 8.6%. Again, it has been hovering between 8.2 to 8.7% in the last 4 particular quarters. This commission is basically what we were seeing pre-COVID. Just during the COVID times, the gross margins, the gross take rates shot up to 10 to 11%. But now they have come back to pre-COVID numbers, and we do not see this number going down. In fact, on every quarter, this number is increasing only slightly.
Okay. Can you give us a split between how you see volumes getting added between the domestic business and the international business? Because I believe you get better margins in international, and finally now people are looking to make their overseas plans. So some sense on what you see here as we enter the new fiscal?
It's not just the margins, even the ticket value is also quite high on international sector. So hence per ticket, we make a lot more money on international segments. Overall basis, prior to COVID, we used to have about 75-25% ratio. 75% would be domestic and 25% would be international. However, I really believe that international travel is going to be the flavor of the season for FY24. And hence, we are expecting this number to shift to 60-40 in terms of total value, not in terms of volume. And that should also increase the margin quite dramatically for the company.
All right, that is on the international part of the business. But Prashant, take us through what you expect from the non-air portfolio. I know this is much smaller. I think the flight booking is around 90% and, non-flight would be perhaps 10-11%. What is the plan there? Is this a portfolio that's likely to increase, and how much you would say, see it increasing in, say, the next 5 years?
We got listed about 2 years ago, and during that time, 97% of our business was flight business and 3% was non-air business. Now, despite the flight business going so dramatically high, we are managing to grow our hotel business, train, holiday, bus business even more exponentially, and that is why the ratio is around 90-10. In the next couple of years, we anticipated to make it to 75-25. Just by the organic, outreach. Inorganic, it will change even more dramatically.
Okay. And China opening up from January, has it had a big impact, or not too many domestic travelers from India are heading to China?
Not too many takers right now, mostly the businessmen.
Okay. Prashant, we'll leave it at that. Thank you very much for joining in. So air travel still going very, very strong. Slip into a very short break. We'll come back and talk commodities. Manisha Gupta joins in next.